Hey everyone, welcome to your daily update for Sol and BTC. Looks like some of our higher time frame support might have started to kick in because the price has been grinding upwards. It didn't, there's a couple of targets that it didn't retest, and they're high probability targets, one of them being 88,500, which on BTC, which is a little suspect. So we'll just have a bit of a look at these closes today and just see if there's any means of sending the price back there. As for liquidity, people have started to turn bullish on the 1 day, so they've started to long. If they were to take a dump, then they could definitely get down to that 88,500 level with ease, just by liquidating or triggering all the stop losses and liquidations for all the people that have started to chase today. And if they want to keep pushing to the upside, because to be fair, they've pretty much got a lot of shorts trapped now and underwater. So if they wanted to keep pushing up, the 1 day liquidity would easily allow them to push up to 95 or even a bit higher. The 32-day support that I mentioned the other day has a target which sits around 98, so we could just play out that move and then dip back, or given it's such a big time frame, they can always go backwards and then forwards again, so it doesn't really, it's kind of hard to trade the really big time frames, unlike a 15-minute chart where it sort of just bounces the hold level and goes to the target. So with Sol, yeah, they could easily go down and hit the 120s if they wanted to, and up to sort of 145, 146, and there is some structural resistance around 145, 146, so again, it might happen. We have, I think, FOMC minutes and stuff coming out this week, so there'll be some excuses just to press the wick button and go, screaming up and down. If we look at the 7-day, so the 7-day, you can see there is a stack of liquidity to the upside, and that a lot of those shorts would be trapped. Particularly the ones that are in close proximity to price now. So that's kind of the one reason why you might not see that dip. It's the same as when they dipped down and they kind of locked in all those longs, then they just keep grinding into them. So we might be starting to see the signs of a rally. If we look at the 30-day, then 30-day liquidity show on Sol, it's up to about 152 for quite a big chunk, and there's some structural confluence with that on a potential close today. And yeah, if they were to go to the downside, then it'd be back down to those sort of 130s. But the 1 day liquidity goes lower than that. For BTC, then you've got sort of 88.2 there through to maybe 87, and those two levels are key range levels, so it's interesting to see them just with that little bit of leverage sitting in them. So if they went down to there, they'd take it all, and to the upside, they'd be cleaning the chart if they went to 104. There is obviously liquidity bigger than 30 days because we've been going in a direction for more than 30 days, so it's there are bigger charts than this, and there is stuff that's off the scale. So let's have a look at these charts. So Sol BTC strength on the daily is looking like a very strong candle. So it's bounced off one of the range trends, which dates back to August, and it's gone straight through two interiors, and it's now just sitting hard pressed against the exterior trend. So if it actually maintains this for the next couple of hours, then it's going to open on the correct side of the trend to be able to break it. Doesn't mean it will break it. You can see up the top here how it's done this kind of thing before, and then it runs into some resistance, ends up closing down anyway. So that's kind of like a fake breakout, if you will. So this next candle, if it opens and wants to break the trend, the first thing that'll happen is it's going to come in, it's going to run up here, and it's going to hit this hold level at 15654, and that hold level is going to try to push the price back down and get it back under the trend. The other thing is that it's come through this break level here. So the break level being 15006. So it has to hard close it. So there's a few things it has to do. Number one, it's got to break the break level, which means it has to close at least where we are now, and then it needs another accumulation candle somewhere whenever in the next few days. Doesn't have to be the next candle, but to break the trend. You kind of want it to be the next candle. So it needs an accumulation candle over that 15006 level. That would hard close the break level. It would be quite healthy then if it tapped it, before bouncing up instead of leaving it behind, because when they leave them behind, they inevitably end up coming back sometime. And the other thing it's going to have to do once it's hard closed that candle is it's going to have to break this hold level. So it's in a good position to reverse. A lot can change in 2 hours. It could do anything from just pull back down. It could go below the, really bearish fake out type behavior would be to sit like this until close to the end of the day and then pull back down under that 15006 hold level, break level, which also puts it back under the trend, which then means it tries to push up again and it can reject down. And then we're back to visiting the 14558 level to try and actually find some support to get through the trend. And definitely that would mean, down here for a few more days. So that's where that sits. But yeah, at this stage, it's looking strong if it stays like this. As for price, though, it doesn't necessarily mean that the price of Sol doesn't go down just because BTC still looks weaker than Sol. And if BTC does pull down to do those retests around that 88.5 area, then of course Sol will still come down. It's just not as bad because the relative strength is good. So if we just look at the weekly, the reason why this looks like such a strong push on the daily, and the reason why it's just gone straight through to interior trends on the daily, is because it's actually also a bounce off a weekly range trend. So that same sort of thing, but dates back to March. Now this particular range trend was able to previously send us from here at about 14125 all the way up to 12502. So we've tapped it again. It's clearly pretty strong. Over the next 5 days, if it engulfs this prior distribution candle by closing up over the 16060 area, then it will try to start to create a range off that and head to the upside. And we can probably take a little bit of a crystal ball look at this and go, does it make sense? And yeah, there's a bit of confluence in there. So it's level 2 would be roughly where the origin resistance level is. Level 3 would be the exterior trend, and level 4 would be the range trend resistance. So yeah, it may be trying to continue to move up to create a range off that, in which case the hold level is roughly what it has to get over, which is kind of common sense. You have to get over a hold level if you actually want to keep moving up. And then you've got the older origin resistance, and then the exterior trend, and then the range trend. So when you look at a candle like that, you can kind of take a guess that what they're trying to do is reverse, because it's the engulfment of the prior distribution candle that actually becomes the controller of the range. And yeah, so they're giving it a shot, giving it the best shot. Doesn't mean it'll happen, but they're working on it. All right, let's have a look at the safety assets. Yeah, and as mentioned yesterday, that's exactly where we want that candle to be. So a decent rejection this time off the range trend. It's come, 2 range trends. It's come back under the interior downtrend. It's actually under the support trend, and I don't think we've never had a body like this under that support trend before. So it's a good sign that you might get some more strength through into the alts. Now, it is not a hard close, so it can still be a fake out, but it is looking pretty good. So if we get a little bit more down and a close under 67.26%, then that would be even better. You'd be under a break level, you'd be under a support trend, you'd be under your range trends, you'd be under your standard resistance trend, and then you would be looking for it to come down here and try to take a bounce off the 66.86% level. And that level has a very high probability of bouncing because it is an origin support. So you might get a pump, as this dips, a little pump into the alts, and then maybe a little bit of a pullback in the alts as some money flows back into BTC and stables. But so obviously the bear case is that that candle can still climb back up before the end of the day. It can get up over the, well, it can basically get up over nearly everything apart from that topside range trend. So yeah, if it pulled back up and got above about 67.78% for the day, then you'd expect that this little pump has been fake and everything is going to then dump. Looking at it from the weekly, yeah, so this is, yeah, I don't know quite what's going on there, other than the fact it might just be trying to pull down. So it opened kind of touching the trend, in which case the trend does have the ability to pull it back down. So it might just be hunting to come down to 66.46% over the next few days. It can still bounce up as well. This is, like I've mentioned a few times, when you open in between a cross like this, you can go up and test both sides. So it may be testing the bottom to bounce back up, or vice versa. But this is a little different because it did open on the trend. When they're going to do a bounce between the cross, it's quite often a dead center open between the new trend and the old trend, whereas this one actually was a bit more to the lower side. So probability of this is more down than up, and more down than a bounce between the two levels. So that's also a little bit of a good sign that you might get a bit of a kick up in alts. All right, let's have a look at the totals. Okay, so total including BTC, excluding stables, the trend shifted on the Sunday candle. The Monday candle did a dive of that trend and came down and hit the break level. And now we're bouncing back off the break level. So it's not a perfect close if it closes at this level at 2.85T, but it is back above the trend. What you want to see ideally is you want to see it close above the range trend. So that means about 2.87 for the day. If it closes up above the range trend and above the normal trend after bouncing off the break level, then there's a pretty good chance it's going to come up here and start trying to attack these downtrends. And it's a decent distance away from them, so that's that's kind of helpful. And yeah, that would be the perfect close. Now it can still bounce by just closing over the one support trend. That is possible. It has tested the hold level already today with this candle, which is creating this bit of a pullback now. And so the next logical step, if it gets above these trends, is for it to go up here and hit about 2.97. So a little bit more of a step towards recovery. Let's look at the weekly. Yeah, so the same sort of thing in the weekly. The weekly shifted the trend to the bottom side. It's dived the trend. It's hit the break level, and it's pulling back up. So over the next few days, you'd sort of expect this to, unless we get some really tragic closes, you'd expect this thing to just keep trying to push back up into that 3.06 trillion area. The other thing we should probably look at is just this, which, yeah. So if we just start up here. So this was our first reversal range, and we qualified it as a range last week when we hard closed this big monstrous blue candle, and that hard closed the 1.618, which is that 3.23 trillion area. Now we've come down, we've tested the next level, which is the 2.78. Now that 2.78 is going to want to push back to this 3.23 to actually retest the base of the range, because it was hard closed that week, so next week it wants to come back here and test it. If it hits that, and if it holds as the base of the range, then it will come down here, and this is bear market stuff where we run into the bottom of the range down here at about 1.89. Excuse me, which is roughly where the entire range was created, or this prior range was created down here at that level. So that's what's, the bigger picture game that's going to play out, and it could play out over the next few weeks. It's not necessarily just going to happen in a single candle. In fact, it's less likely to happen in a single candle. But if it does close a weekly candle back up over that 323, then that means that, hey, that range is failing to distribute and go lower. And it means that this candle here would actually become the control of the range to the upside. And that gets you the ability to test 3.6, an all-time high at 4.08, and then the upper parts of the range if it keeps pumping. So this is the common question on everybody's lips right now, and the most thing that people are asking is, are we in a bear market? The thing is, you just don't know. It's easy to say, hey, look, yes, we were in a bear market because we've just hit $1.8 trillion, and that's the bottom of the range, and that just shows that we've just broken out of the range we were in, and we've come all the way down to the prior range bottom. And then you go, yay, we were in a bear market. But it could literally flip from where it is now. There's plenty of structure to do it. It is testing the middle of the distribution range. It will go back, it'll most likely test the base. That could be either a bear market rally, but if it closes over that base, then that would be a sign of continuation. It would also create the new range controller, and then you go up to a higher high, and then this was simply just a pullback. So no one really can answer it. They've all got their own ways of looking at it, different charts, different reports, historic models, whatever. But when it comes to price action, all you're really considering right now is that we moved a trend, we're bouncing off a trend, we're bouncing off a break level. If you had just longed the break level, even if you'd longed the trend, you'd be getting back up into profits about now. If you had staggered in by taking longs on the break level and on the trend, you'd be up now. And you'd be doing that because, quite simply, they are weekly levels. They are going to bounce. There is a measurable weekly range level in the same place. So I was showing this to a guy. We were on a big trading call yesterday, and I could hear his mind getting blown. When you've got a break level of this range, and it perfectly lines up with the range level of your distribution range, and it relocates the trend, and then it dives through the trend to hit that level, then you can pick your strongest favorite token based on your strengths, based on the difference between this chart and the next ones, which exclude BTC. And you would know, okay, do I long an alt or do I long BTC? What one has got the better strength? And it would be, clearly alts have got better strength because they're not in rejection. The total charts, including alts, looks better. And then when it hits this level, you could long one of your favorite alts, and you'd be in profits now. That's kind of all there is. Very simplistic way of looking at, do I long something, do I not? All right, let's have a look at totals. So this excludes BTC, and you can see much stronger. So it looks like potentially going to break a trend on the daily. Looks like we may even engulf a candle on the daily. We may even creep back up into higher levels. So that's actually, looking pretty strong on the daily there. And if we look at alts on the monthly, so this is a range base here. Sorry, alts on the weekly. This is a range base. It's bouncing off it. So it relocated the trend. Actually, did it? No, that is just the trend. It hasn't even lost the trend. So alts have just hit the exterior trend. They've dived through the interiors. They've hit the exterior. They've hit the whole of the range, and now they're working their way back up. So, it's very, very likely that this is just going to keep coming up over the next week or so, and it's going to want to test the base here at 1.07T. And if it gets back over that and back over the trend, then you get continuation. If it doesn't, you get a dump, and then it'll come back down and try to attack the lower part of the hold. So it's alts are actually looking surprisingly okay at the moment. All right, let's have a look at Sol. So on the daily, we're in a position to open the next candle over the top of the trend. This is pretty much a bounce of a range trend created from this candle back in the 22nd of June. It's bouncing the relocated exterior trend, which is good. It's bouncing off a break level. It's bouncing off a higher time frame origin level, and yeah, it's in a position. It's tested the hold level already. It's in a position for the next candle to open up in an appropriate place for continuation as a possibility, right? So enter disclaimer there. Just because you're over top of the trend doesn't mean you're going to break it. But it has a hold level, which was created off a bounce of a break and an origin and a trend. So everything is in position for this thing to start to try and build an upwards range. So if we have a look at the range, what would it be? Yep. So the one of the range is the break level. So that makes sense. It's going to want to get over that break level, otherwise it can't create a range anyway. The 1.52. What is that? Can't see what that is there. It's got to be something. No, I don't know about that. Don't like the confluence of that, but yeah, it could be something back in there. It's a little bit far away for it to be the hold level. Okay, so I don't know if I like the 1.52. 1.66, yeah, roughly. No, don't like that candle. That might not be the candle that actually creates the range. So maybe we get an up, a down, and then another up, possibly. Okay. So at this stage, we want it to close over this. If you get an actual real pump by the end of the day, to create a range, a daily candle needs to close over 152, which would be an absolute miracle off this position, because it would have to go through a break, it would have to go through these resistance levels, it would have to go through that range trend. So it's more likely it's going to, if it is going to recover from here, it's more likely it's going to spend a bit of time here before it does recover. Let's have a look at the 2-day close. So the 2-day close may engulf. It has rejected off the backside of the range trend, so that's causing it to push down at the moment. We want to see this ideally get back up over that 141.350 level. But I don't think... Yeah, but that's a higher time frame level, so it doesn't really matter as much today. What matters a bit more is a 2-day close over 144. But to do that, we have to get over the range trend. So yeah, we could get a little bit of a pump before the end of the day to bring that up. It's bouncing on the trend. If it engulfs, it's the start. And see whether that has... Yeah, and that's got really good confluence. So that upper range limit is the hold level at the top there. Okay. Yeah, so that might be at least down here for another few days. Looking at the 3-day. Now, the 3-day doesn't close today, but just to illustrate, trend moved, bounced off trend. This is the one that I mentioned yesterday was one of the more bullish looking closes, and it could create the start of a move back in the other direction. And it turns out that crystal ball is right, and it has created this pump. So it's into resistance now, but it's got 2 days and 3 hours for... And it doesn't really matter what it does in the next 2 days and 3 hours. It can come back down, it can go back up, it can just bounce all over the place. But if it closes back up over that resistance level, which is around that 141, and even better if it got back up and over the 144, so most of these levels are quite confluent, then that's great. That means it's reversing. So, and it's quite a way away from its downtrend, so it's got a lot of room to move on that one. Now, one that is closing today and could create a dump is the 7-day. So the key level here on the 7-day is this 140.254. And as you can see, in typical algo fashion, it's probably just going to sit around that area for the rest of the day. So a close over top of it would allow for a bounce and then a test of these trends up here at about 149. And they're not hard close trends. So the candle can go back through those. It can test the exterior trend, which is about 162. And if it was to try and push through the exterior trend, then obviously the actual upper range areas are higher again, 168, 175. We can look to see, have we hit the bottom of the distribution? So we'll just try this. So if we look at the total, the upper range there, we haven't. So if it gets a bad close today, it could come down here and try to test the 124. And if we look at the range that sits inside of that range, we'll just see if that's complete. And nope, that's not complete. And about that 123 level. So if that has a bad, and you can see most of these, the closes that we've had in these last couple of days have not been able to get back over these range levels. So this, if we have a bad close on this support today, then 123 would definitely be on the cards. And if we look at this range level, and so this range is now being tested. So this is where we've bounced at the 131. So you might, if we have a good close and it tries to come back up above the trend, then it could come up to about that 159, 160 would be the range level. And it might just go through that, tap the trend as well, just for good measure. So yeah, you could pretty much say that good close, you could look at anything from 148 through to 161. Bad close, you could be looking at 123. So that time frame. And on the 14-day, bouncing off the range trend, which is pretty good. What have we got down there? We've got support at 126 and 120. But the key level to, like the bullish level to get over today would be 145.130. It's not a hard close. Nothing's a hard close, unfortunately. So there's so many 50-50s when you're kind of trading in the middle of a range like this, because it's not like at the bottom where it's just like, okay, cool, we've only got one way to go, it's up. When you're in the middle of distribution and accumulation, that candle doesn't necessarily have to reject off these levels. It can just keep going up. If this has a really bullish pump and gets back above 149, 150 by the end of the day, I don't know, some tweet news or something, then it's the next level for it to head to is actually up in the 180s. So that could flip really bullish really quickly. As far as things that might get in its way, 161 is the range level, 114 is the one to the downside. Okay, so you're kind of wanting this to go up first. If it goes up first to test the range level and it can hold around that range level, then it recovers the trend, and then the trend can push it up to the 180s, 190s. Okay, so failing that, if it opens down here, rejects off the backside of 145 or off the backside of the trend at 149, or if it tests the range level again and rejects, then it's going to come down. And then these horizontal supports at 126 and 120 are going to try and push it back up and break the range. If they don't, then it's going to come down and test the one at 100. And if that can't hold, it's just going to keep working its way towards, it'll go to 114 first, but if it then closed under 114, it would test the 100 and it would test the range trend down here at 92, and then it would test the next range trend at 83. You can kind of see where I'm going with this as it tries to work its way down to eventually hit 67. So those are the levels to watch. So you want to see it get back up over this stuff. Okay, unless you're short, and then you want to see it not get back up. So the 23-day is trying to create a distribution range. It's kind of a world end of this thing. So if this successfully creates a distribution range, then Sol goes to 0, because level 4 is, it can't technically go to 0, but it's going to get really close. Level 4 is a minus. So as far as the more likely outcome, based on every other time frame, is it's going to create, well, it's actually got a range trend based on the October 10 scam wick. So it could go down to 134 again and then push back up to 175 at the most. Well, actually technically 190 at the most, being the whole candle. The other thing is, if that scam wick is not meant to be there, then it's creating potentially a range trend today, in which case it could come down to that 123 and then bounce back up to the 152, and then try to push its way back up to the 175 and the 190. So it's key level for the 46-day is a close over 145. But yeah, nothing's hard closed. Haven't even touched the 1618. Hold level is up there between 175 and 182. Trend about 173. That's the prior broken trend, plus it looks like it's probably a range trend as well. So there's not a lot of reason for this to dump, other than the fact it's below a break level. So it could come down and test the range trend 108. Could check the prior broken trend about 113, 114. So I mean, it can dump, but it's not. It's 50-50. It's just as likely to go up there and try to test that hold level. Okay. And into the really big stuff. So trend at 120, opposing trend at 233. So, and then a quick look just at the weekly. So the weekly range level, which still has 5 days to go, is this 134. The range base for the weekly is up here at 178. So if we don't manage to break this 134 level, I hope I said 134 before, then naturally it's going to try and work its way back up to 178 and have to get through all that resistance, etc., on the way back up, with those key levels, which you can kind of see appear across a lot of the other time frames. The key levels, things like 161, 174, 176, 179, 178, like they're all basically the key levels. And of course 147 and 141.3. So yeah, when you look at the bigger time frames, they are quite often just clearer versions of the levels you can find on a lower time frame chart. The thing is, there's just a lot more levels on a lower time frame chart, and you just don't know which ones are the most important. But in this case, you can see which ones are very important. If the weekly loses, then loses that 2618, then yeah, it's going to come down and start testing 120, 109, 100, and try to make its way to 90. And if it loses 90, it's going to try and make its way to 46 bucks. So that's pretty much where we're at. Okay, let's have a look at BTC. Okay, so BTC on the daily, this will give you an idea of what's been going on first. We started up here back in 6th of October. We created our first dump. We haven't retested the base of that range, and that's because we completely broke that range. So 121 is still possibly a retest. Certainly it's an area that price is going to want to retest. If we're in a bear market, it'll be a retest for the next bull market. If we're not in a bear market, then it's going to be heading back up there. Okay, so the first range came down, hit the bottom level, huge liquidation wick. Yeah, and that was everything below the bottom of that distribution range just got obliterated. Came back up, tested the level 3, And it was actually this day here, this 16th of October was the day that it was like, okay, cool. So the next pump, you just short the pump because it's lost that range by hard closing underneath it, which hadn't actually happened the prior days. The prior days had at least kind of closed on it or in it, but it was that day there. So from that point, what we want to do is we want to see, build a short up inside here, and it'd be this candle here most likely. That's going to be leading the next range. And as you can see, this one here has come down and it's hit the bottom and it's hard closed under the bottom, and we have been struggling to get back up above 95. Okay, so what that means is that there'll be then another range in play. And so you can come down and just check all these. So that one got broken. A retest of 102 might happen because the candle that broke it, it hasn't gone back to retest it. So that gives you an idea of another potential key level. So let's have a look at this range. This range got hard closed. Going back, so this was hard closed yesterday. So going back to 95, would be, again, something that is going to be looking at a potential retest. And now we're on to this candle. Right. So what does that mean? It means we have some key levels. So we do not want a blue candle on the daily between 93 and 90.9. Okay, so if we get a blue candle in there, then effectively this becomes the base of our daily range, and then 86 becomes the target. 88.6 is really, really close to one of the weekly retest levels, so that's kind of sitting there at near that 88.5. And 90.9 was a level that there was support at. So the daily itself at the moment is pretty much having a fight between this 90.9 level and this 93.148 level. If we can close up over 93.148 today or any subsequent day from now without having a distribution close in between those levels, then the range is starting to fail, and it means that you're looking at getting a reversal. So key levels then, if we look at the structure, are things like the origin levels here. So we've got this one at 94.085. So we don't want a blue candle under that, which we haven't technically done it yet because the last blue candle was on the levels, not free of the levels. We don't want one under 93.465. So those are your key levels. So if we can get a bit of momentum, get a bit of buying pressure in, it doesn't have to be today, but it could be several days, over a period of several days. If we can get up over those levels, then we can actually create an accumulation range, which would be based off this candle. And so if we're looking for confluence, we've got rough confluence with the hold level. We've got rough confluence with whatever caused that support, which would have been something in the past. Which was these origin levels back here. So that created prior support at 98.9, which would also be resistance. And if we skim to the top and go, what do we have up the top? Pretty close to that origin resistance level there at about that 113. And this and the 108 is inside the hold level, and we know 108 is a weekly level. So that's so we might spend a bit of time. We might have some bullish news pump or something, whatever. It could happen in a day, it could happen in 3 days, it could happen in 4, 10, whatever. It could fail. So a blue candle down in that area, that will equate to bye-bye and more distribution. So once we get over the top of the trend, it's entirely possible that it wicks down and then goes up, because it's only the close that matters. Right, so if we were to wick down and hit these 88.5 areas and then have a bounce, maybe a strong bounce, and maybe that bounce is the one that engulfs the daily and kicks off the new accumulation range that and does the retest of these upper levels. Okay, that's the kind of thing that can happen from here. I don't think I would just be blindly opening along here because it's in resistance. But if it does recover these 94, 93.4 sort of levels, then maybe, recovers them on close. Okay, but you'd still want to allow for the fact that it could come back down to this 88.5 even as just a liquidity sweep, because that'll take out all the people that have already started longing, basically. Build the position for the whales and then they'll push it up. So looking at the 2-day close, so straight out key levels for the 2-day, same sort of thing. We want to stay above the range level, which is 92.778, and you can see that that's where they're having this real fight now. Ideally, we want to get back up inside the break, but it is a higher time frame break, so it doesn't necessarily matter that it happens today. So that's that 93.340, and it would be very good to get above the trend. So that's about 93,700. So it's all very possible in today's close. Now, from a bearish perspective, if they close under the trend, if they close under the range levels, so this is now we're talking closes that are below that 92.7 area, then they can come down and target 87. And that's that could be done off rejecting off any of these levels, including just a rejection straight off the invisible range level that you just don't even know is there. And yeah, it could pop back down. So in which case, that's where you'll be looking to start some longs. Okay. Now, if we do close above the range level also, more confluence to go in and doing a retest of that 98. So let's have a look at... And so, yeah, just so you can see how this works on the 3-day. Our 3-day distribution range, 89.635 was the bottom of the distribution range, and you'll notice that that's where we bounced. Okay, so it doesn't always have confluence with things. Like in this case, it was kind of like diving of a range trend, but the actual level was that level, the 89.635. So yeah, the 3 days just, if it keeps going, it's going to come back to 95 and then 102 and then 106, assuming it keeps going. Okay, the 7-day has dived below the range trend. It's found support on the prior range support at 90.759. It's going to open kind of just in the middle of nowhere, but it is going to shift the trend. So that is actually positive. So like the 3-day that we had, which shifted the trend, we're going to get a trend shift here. That means that a touch of that trend, which means a revisit of the 89 sort of 90 area, if we revisit that, tap that trend, the hold level at 98.931 is the minimum target that it should be aiming at. Now, it can play out in two ways. It can go up first, which hits the hold levels, and then reject back to the trends, and that is bearish. If it actually pumps first, it's usually a trick, and a trick for longs. Or if it dumps first, it's usually a trick for shorts, because once it hits the trend, it will tend to bounce back in the other direction. So we can check to see there's a key level at 93.626. If it closes over that, then it's more likely to go up first, and that's just because it's failing to create a distribution range locally. And we can check up here. Yeah, and if it closes over 94.024, then it's failing to create a bigger distribution range, in which case the base of that range is 106. So 106 is looking probably like a good top side target for if we have a like a rally, but 98 is looking more like the bottom side, and then like, or neutral, and then the really bearish is sort of like 95, but anything can change. If we close under 94 today, then it's not a hard close of 94, it's a 50-50 chance then that we just reject to 81. So and that could be over a week. It could go down, bounce the trend, go up, and then come back down. It could just go all bearish on us, go down, and then back up again, and have some big pump, but that's the levels. The 14-day hasn't touched the whole candle. So I mentioned yesterday I find this one very suspicious, but at the same time you could also argue that's bullish because it hasn't even tested the bottom of the range. So if we look at that range, 97, 95 are sort of areas where it could run into some trouble. But the hold level is, sorry, the prior range break is at 98. The hold level is up at 111. So, and it hasn't technically hit the bottom of the range yet. So that's yeah, I wouldn't scream bearish. But there's also a trade. If it comes down into this whole candle, then you've got a backside fib trade there, high probability bounce. So if it goes all bearish on us, that's an area where you could potentially change the leverage on your positions and get out. Outside of it, it looks like it's bouncing. Okay, so let's check out the other way. So 80, 97. So yeah, confluence. Even if it closes here, there's high probability that it goes to test 97. If 97 fails, there's a probability it goes to 108. So that's, and nothing's hard closed. Nothing's moved. All right, so it doesn't look too bad. Okay, and then we're starting to get some higher time frame trends that shift today. So on the 23-day, we're going to move to the bottom. As long as this wick stays long like this and we don't close much lower, then it can bounce that trend and it can test this range level at 99. So that's, and then if that range level doesn't get a hard close, then it's going to go test the hold above 108. So that's, most of the time these moves make it to the hold. So that's potentially even a bigger rally, but yeah, any rejection level can reject, unfortunately. Okay, so no trend shift, but we get a range trend on the 46-day. If it bounces the range trend, 96.9 is the first range resistance, but if it hasn't hard closed, which it isn't, then it's more likely it heads to around that 107. So far, these same numbers basically keep popping up. The 106, 107, 108 area would sort of be a relatively bullish bounce on a lot of these bigger timeframes into, some sort of resistances. And the greedy areas of this is like 115, so it could go there, but that's you just don't want to. When you could be at the end of a cycle, you don't really want to be going for greedy targets. Yeah, and then of course these really bearish levels, depending on each individual close, could be anything from 94 through to 95, 98, 99, that sort of area. Yeah. And then you get stuff like this, which is just like nasty. So the 161 day, we want to see it close over 93,570 today, please, because that just takes that off the table. We don't want that on the table. So this would potentially create a dump. It could be an instant dump. It could go up and do a retest first. It could go to an all-time high for 161 days, but it will come back to 82. Okay, so that's we just don't want things like this on the table because they create a lot of uncertainty over the really high time frame. That it just at some point it's coming back, and yeah, options would include insta dump. Maybe retest the backside of the new range trend at about 98-ish. Liquidity sweep of the top side, which means 121 or higher. And yeah, it is what it is. Okay, I think that's us for BTC. Let's have a quick look at Tesla. So on the daily, it looks like the trend is currently winning. It's been pushed back down to stay underneath the downtrend. So at this stage, where the next candle opens obviously is key, like always. if it opens above the trend, it can try to push up, but it looks like that will be a daily hard close of that top support. So probability of rejection now is much higher on the daily time frame than probability of moving up, which means most likely the weekly is, yeah. So the weekly has gone back to that 1618 range level. It's rejecting. So if the dailies don't recover over the next 5 days, that'll mean that the weekly ends up hard closing the range level, which means that 383, 351, and 319 are the areas that it's going to try to go to. There is a trend which can provide a bounce, which hasn't been tested yet, and that might allow you to exit just up towards that higher area, or de-risk, or simply just watch the space and see if it closes back over it again. So the trend can stop this range from developing by offering support, because each level has to basically be violated. So, but yeah, it's danger zone if it goes and hits 411 on the daily. And it's good to see MicroStrategy had a little bit of a pullback. Might just quickly look at that. Someone wanted me to look at it yesterday, and it just looked like absolute death. So let's see. Still kind of looks like absolute death, but so without going into every single time frame on this, because I haven't really studied it quite like the stuff that I trade. So it's if it closes the month below 236, then it's not technically a hard close, but it would be a hard close of that 320 level. So if it went up to 320, you'd expect resistance to push back to 236. If it rejects off the backside of 236, that could come down to 152. We've got a monthly range here, which has topped, and basically the 201 level, which is the support level for the base of the monthly range, is what's holding it up at the moment. So it could move, if it stays above 201, it could bounce to 262. Let's see if I've got a weekly. The weekly range looks like it's breaking. Yeah, that was the weekly. Yeah, that's taken a punish. Yeah, so the weekly range flipped into resistance here at 267 with that close. So that's taken an absolute punish. Just see what we've got down here. That's pretty bad. And what about this? So it's sitting on the top side of the prior range now. That's this area here. So as long as it doesn't close below 201. So see how fractally this works? It's the same as looking at the monthly, right? You can find multiple ranges on the weekly, which represent the monthly. And what it's saying is that we need to stay over 201. And if we stay over 201, then we have the chance of maintaining a bounce, same level, 201. Then we have the chance of maintaining the monthly range, even though we've lost 3 weekly ranges. Or, sorry, 2 weekly ranges, and we're retesting the backside of an older one now that had a breakout. So that's, that's all. If you're a swing trader, you'd just be looking for this to kind of stay low for the rest of the month, and then if it does stay low but stays above the key level, then you'd do a swing trade and take it up to 262. Yeah, that's us. We'll catch you again. Bye. Oh, hey, like, subscribe. YouTube stuff.